Markets finished somewhat flat today as we finish up one of the last trading weeks of the year. We have 4 more trading days left to go in the year. So let's take a look at what's going on and see if we are going to get that little Santa rally we've been looking for, that 5 to 7, maybe 10% rally in traditional markets, 10 to 15% for Bitcoin and some crypto. But right now, the Dow finished half a point up. Well, the market's just about to close as I'm filming this. Half a point up on the S&P, 0.19 on the NASDAQ. Markets have been a little bit up, a little bit down. Like I said yesterday, I was expecting, a little up to flattish today. And then as we get into next week, put the potential for that rally to take place as a lot of tax loss selling is going on. But Wall Street needs to get their bonuses. And one of the ways to do it is drive the market down so you can rip it back up. And then once we get into next year, the recession debate begins, why everyone thinks a recession is coming in 2023. Economists have penciled in a recession in their forecast for next year, but views vary on the timing and severity. What they do agree on is that the Federal Reserve's interest rate policies will be the trigger for the recession, while it was the central bank that rode to the rescue after the last 2 downturns. Usually recessions sneak up on us. CEOs never talk about recessions, said economist Mark Zandi of Moody's. Now it seems CEOs are falling over themselves to say we're falling into a recession. Every person on TV says recession. Every economist says recession. I've never seen anything like it. And the reason that everybody's calling for a recession, and there's narratives out there that if everybody expects something or is calling for something, it's not going to happen. Well, this is different. This recession is because of the Fed. They want a recession. They want markets to go down. They want real estate values to go down. They want people to feel poor. They want growth to slow. Why? So the labor market can correct, so pricing can correct, because inflation is going to be stickier than what everybody thought. The new transitory is sticky inflation. That's the new transitory. The higher inflation is going to be stickier for longer, and they have to get that corrected. And in order to do that, you have to put the country into a recession or economy into a recession. So it's a Fed-driven recession. This is what they want. They want markets down. They want asset valuations down. They want tighter financial conditions. And how do you do that? You create a recession. In other news, Sam Bankman-Fried is out on the bond, $250 million bond. The interesting thing here is that is not cash that was posted. Generally, when there's a bond, you'll pay, or a bond person will take 10 to 15%, maybe 20% of the amount to guarantee that bond. But in this case, the only thing that was pledged was his parents' house. And the other thing that's really interesting is what this bond is. Typically, this is a recognizance bond. The personal recognizance bond contains Bankman-Fried's solemn promise and his parents' solemn promise, just a promise, that they would pay $250 million if he fails to show up for trial at the appointed time. So Sam Bankman-Fried could essentially leave the country, go somewhere where there is no extradition, and just walk away scot-free without going to jail. He could literally do that. Now they took his passport. He's banned from traveling. He's got an little ankle thing on, for house arrest. But that's the only thing they have, is if he doesn't show up, is a promise to pay. So if he's out of the country, there's no extradition. Chances are slim, but it's still something that could potentially happen. So very interesting that he was let out on bond. I know a lot of people are upset about that, but interesting time. So here's the Dow. Nice little bounce here today after a down day. And let's take a look again at last year. So we have 4 days of trading next week, and today is the 23rd. So last year on the 23rd, the market was about right in this area here, and then it rallied into the end of the year, into the 30th, and really ultimately up into the first week of January before finally rolling over and starting its trend down. So the market rallied about the same kind of positioning we're at right now. Had a down day, then one up day, and then the rally took place. And this is the Dow, is about 5%, like I said. So not huge, but a little bit of something. So this conditions are setting up somewhat the same. Had a nice had some nice buying, absorbing that big down day that was down about 700 points at one point yesterday. Bought the price action back up today, had a nice little bounce off the bottom there in the Dow. NASDAQ, the same thing, good recovery on both days. S&P, same thing. So we could potentially see, a continuation next week for a few days, and then maybe rolling over after that. Could continue into the first week of January, but as we know, recession is a big concern next year. I think the consumer is really going to start pulling back next year after we get through the holidays and the holiday spending is over and taxes start coming due, credit card bills start coming in, and car payments come due, and reality sets in of what's going on and where we are in the economy. So it could be some serious rude awakenings coming next year. Here's the VIX. The VIX, one of the things that happened, the VIX popped down to 20 again yesterday, had a rebound, reversed. Dixie kind of holding flat right now, not really showing any signs of reversal, kind of consolidating in this area, but the 10-year has definitely reversed. So the 10-year is on a march towards potentially back up to this 4% range, 3.75 today. That's going to put pressure on mortgage rates, tightening of financial conditions, which is what the Fed wants to see. Let's take a look at Bitcoin. Still consolidating right here in this area. Potential distribution up here, getting ready to consolidate and work for that next leg down like we've been talking about. Your main levels on Bitcoin to watch are going to be next at $12,000 to $13,000 range, and then ultimately could bounce around in here for a while and put that bottom in between 9,000, 10,000 and 13,000, 14,000. So that could be a nice choppy range to start thinking about a bottom. And when you look at markets, kind of the same thing. Markets, if they work their way back down, break these October and November lows. It's October for the Dow, October, November for the NASDAQ, October, November for the S&P. If they break those lows, work their way down, depending on what's going on with recession and the Fed tightening and things like that, could start to kind of carve a bottom in here around the pre-pandemic highs that we saw in 2020, and that's still a good ways down. There are a lot of technical targets in the 3,200 range for the S&P, which is slightly below that pre-pandemic high, and that's still a long way off. So it could take a while to get there before the markets start carving that bottom in. Same thing with Bitcoin. They could dance around here for a little while, bouncing between 15, 16, and 18,000 for a while before taking the next leg down. Looking for that catalyst for that. And then if something major happens, obviously, we saw where it went the last 2 times in 4 years to that $3,500 and $3,000 level. Not saying that that's in the cards, but if the markets have a major meltdown or the economy has a major meltdown, then that is definitely a possibility. But right now it's just, repricing in levels, markets, valuations are changing. Earnings are what the markets are looking towards, and what we'll get into next year in terms of what are proper valuations, what's a proper multiple, what do the earnings look like, what does recession look like, and then of course inflation. Are we going to get a double top inflation, double peak inflation, and revisit that, or have we peaked, plateaued, and going to continue the downward trend on inflation, albeit a slow downward trend, but still trending in the right direction. But I think inflation is going to be higher a lot longer than what the Fed had anticipated, than what economists are anticipating. And that's why all the recession talk, just because of the pressure that's going to put on spending and on growth. So these are the things I'm looking at. And I want to wish everybody a Merry Christmas, a Happy Holidays. Christmas is 2 days away. So I hope you have a fantastic time with friends and family and enjoy the holidays, and I will see you on the next video.